Jeff.
Hey, Meesha.
Welcome back to the North Atlanta Real Estate Podcast with your enthusiastic and knowledgeable hosts, Meesha Rawal
And Jeff Ahi.
And we talk real estate, economics, and what's really happening in the North Fulton, South Forsyth housing market here on our podcast. And we're diving into something a little different today, the global geopolitics and how it could hit close to home here in the Alpharetta, Milton, Johns Creek, and the Cumming area.
Oh, so we're talking war today? Is that what we're doing?
Well, there's an escalating conflict involving Iran, the U.S., and Israel that's happening right now.
Yeah, I've heard.
And, we were discussing what the impact could be on the real estate market here back home in Georgia, even though we are thousands of miles away from the Middle East.
I mean, we've both been doing this a long time. And, I can remember when the World Trade Centers came down, everybody froze. That definitely affected the real estate market in a sort of a short-term basis. Certainly when we had the financial crisis and in 2009 in March when the financial markets were plummeting and everyone was fearing. We had all these huge bankruptcies from our Lehman Brothers, et cetera. That also threw in kind of a wet blanket on the market. I think it's too early to tell with this. Trump has certainly proven in the past to be very sporadic and not one to stick long term to something once it's not popular. So we don't know at this point whether this is going to be a protracted war or if it's going to, he'll just claim victory in 2 weeks and it'll disappear. In that case, probably not much will happen. If it goes on for a long time, one of the things I think you and I, hopefully we do best is we try to inform our folks with facts so they can make good decisions, not try to scare people with things that might happen because I don't have a crystal ball.
True, we're not into the speculation business.
Yeah, I think that's fair to say.
So should we jump into the mortgage rate and tell our listeners what the mortgage rates are right now?
Yeah, I think there's a good example of something that the war did affect. Once again, we don't know how long lasting. The rates had dipped just under 6% right at the beginning of the war. And now here we find ourselves, whatever this is, 9 days later. And we have mortgage rates have climbed back up, 30-year rates to 6.14, according to Mortgage News Daily. So it's climbed back up. Today, the market, we looked at the 10-year Treasury right before we started our program here. It looks pretty flat at the moment. Here is where we are. If this goes on a long time, it could affect things going forward. If this sort of peters out and disappears, we'll probably still be caught in this range where we are now, around 6%-ish, right?
Mm-hmm. Yeah, and I feel like because of the oil prices going up, and I think that oil briefly touched $120. Now it's gone back to $100. It could also mean that new construction builders could see an increase in the supply costs. Material costs could go up, and that could affect prices for new construction.
Well, certainly if the oil prices were to stay up for a long time, and we're talking about 6 months or something, and they stay up, it will work its way right in through all the supply chain, and everything will cost a little bit more because of that. It's too early to know, so I'm not going to get too excited about that yet. I think that the overall news would be, we did take a look, I guess you and I, and talked about a little bit at the beginning of this, what has the beginning of this year, the first 2 months now, we've closed out January and February, what does that look like compared to last year at the same time?
Yeah.
And
so, how consumer confidence has been impacted because of these changing interest rate and what the current situation is like. Yeah, so do you want to give us the numbers, Jeff?
Again, without going into the weeds too much, with very few exceptions, when we're looking at North Fulton, we even expanded. We looked at North Fulton, Forsyth, we looked at Roswell area, and we looked at even Peachtree Corners. And the thing that we can say there, with the exception of maybe saying that in Forsyth County, they've had an increase of maybe a 20% increase in single-family home sales, a drop at 50% in attached homes. Otherwise, I would say, looking at these numbers, they're really not that different than last year at all. So it isn't like, and remember last year we had rates at 7%, and now they were down to almost 6%, and it did not create this huge flood of purchases like all these gurus tell us it's going to, the rates are going to come down. Well, that hasn't happened. The numbers are really pretty much the same, 24, 25 was the same. Even 23 wasn't that different than 24. So, unless something dramatically changes here, this year is going to be pretty much like last year.
And there is this housing shortage in America, all over the country, not just in our area. And I feel a lot of the properties are tied up by institutional investors in rentals and investment properties. So if those get released, hopefully, I don't think there is much chance of it being passed, the bills.
Yeah, there's some talk in Washington, I guess, about some of these things of how to get the institutional investors either to not be allowed to buy any. We just saw something today where they said, well, we might force them to sell after 7 years and all this stuff. The reality is this is just talk at this point, and nationally, institutional investors only own 3% of homes. Nationally, that's not that much. We're a little bit more, I think, in our Atlanta market. We all know from politics, don't change fast. They're not going to make these guys dump them quickly. Nothing is going to come solve this problem. The biggest problem that we have right now, if we really want to look at it, is that wages have not been rising as fast as home prices, and it's just more unaffordable flat out than it was 5 or 6 years ago. That's why the average age of the first time home buyer is now 40 years, where it used to be 28 years old. And so, it's
affordability,
a tractable problem. Yeah, it's a real problem.
It's an affordability issue that we have here. So we have housing shortage. Wages are not moving as fast as they should. And with everything else becoming expensive, the cost of living has gone up.
Yeah. I mean, so there's only two ways that the affordability is really going to get solved, so to speak. Either, wages have to go up dramatically. Home prices could go down dramatically. That would also make it better for affordability, or interest rates to go lower, right? And so that's kind of the only factors. And you got some little things along the edges, right? They could make some new legislation and try to make it easier or less expensive for the builders to build homes and all these kind of things, but you're not going to wring more than 5 or 8%. I actually did a study on that. I was kind of curious, what are the impact fees that the government's put on in regulations? And there's no way to really strip out so much. There's no way you're going to make an inexpensive home. They'd be doing it right now if they could. You can't do it right now.
Yeah, and these days, what we have seen is new construction builders are offering fantastic incentives to new buyers because they want the inventory to move, and that's kind of slowed down again depending on what area we're looking at. Now, if you're away from the highway and if you're in far-flung parts of Forsyth County, then those houses are moving a lot slower, and builders are offering up to $25,000 in incentives, a 3-to-1 buy down. So yeah, we have seen there is a little bit of supply coming in, but not as much as the economy really needs.
And I think you were telling me that was in a subdivision that was under $500,000, I think. So $25,000 is a significant 5% incentive is pretty big.
So this is in Hemingway in Coal Mountain, I think right close to exit 16. And there are two builders who are building in their Meritage Homes and Davidson Homes. Fantastic properties, but they are offering incentives because the January-February market was slightly slower, and because of the end of the first quarter, they want to move all the standing inventory, and they're offering incentives on those.
Yeah, and I think we were also in some of the research we were doing here this morning. We looked when it was talking about the fact that we have a supply problem of new homes being built. There were less new homes built last year than there were family created by, I think it was, I don't know what it was less than 100,000 people, but it was a difference. We aren't building enough homes for the families that are getting created. And so, I guess over time it becomes a problem, and, it is the kind of thing that helps keep the prices up. Maybe, the kind of thing also we did talk about, but demographics would also solve the problem. Want the baby boomers, like myself, I still argue with my wife. I'm not quite a boomer. I'm there born in 64. I like to think I'm not. But in any case, once that population sort of ages and starts dying off in larger numbers, honestly, there's going to be some excess homes because we don't have the population growth we've had in the past. And so, something like that could change. That's not a fast fix. Maybe 15, 20 years down the road, we'll be in better shape.
Yeah. And both Fulton County and Forsyth County have amazing incentives for the aging population over here because we want to make sure that they're not overpaying in taxes. So we're making it affordable for them to continue staying in this area.
Yeah, that's right. We had talked about that before. Fulton County just passed that 25% reduction in school taxes when you're 65 or over, I guess now. Yeah.
So these are some of the national trends shaping the housing market right now. And while there is a war going on halfway around the world, and it may seem unrelated to our local housing market, the reality is that global events do ripple directly into the mortgage rates, construction costs, and buyer behavior.
Yeah, absolutely. I think it's just like we said, is if this goes on a long time and is worse than, some people think, then sure, it could have some big impacts. If it just sort of fades away in a couple weeks, which is what I guess, if we want to see Jeff being Nostradamus, that's what I'm saying. This is going to fade away in 2-3 weeks outside because we're just going to bail. Then I think the effects will be kind of minimal.
Yes, and we'll keep watching the economic signals and bringing you updates on how they will impact the local real estate market.
Yeah, that sounds good. And if anybody thinks I was an idiot and out of line, I want to hear from you. So send your comments in.
Thanks for listening. Stay tuned, stay informed, and stay smart. This is Meesha Wall
and Jeff Ahi
saying goodbye.
Bye-bye.